Amazon and Google and Facebook are going to be, we're going to be looking back on 2022. I'm going to say like, yeah, that was the, like the bear market, but that's also when X, Y, and Z were founded,
Yeah.
and they're now like tremendous. And the aim of this platform was to increase transparency. Blockchain, it doesn't just like magically solve transparency. You need other checks and balances in there, because if you put the wrong data on the blockchain, it's still going to be wrong. The
Yeah.
blockchain basically just enables transparency and accountability, right? You see the flow of funds.
Sebastian Banescu is the CEO of Chainproof, a company providing regulated cyber insurance for non-custodial smart contracts. Now, this is something that's not really been done. And when Chainproof was set up, Sebastian and the team were very early on in this endeavor, and they needed the rest of the industry to catch up. To do that, they went out and educated some of the main players, and now they've got some great traction, and they are in a space that has amazing potential over the next few years. But I wanted to get Sebastian on the show because he made the jump to Web3 from a security background at BMW. So I wanted to get his take on the space as a whole, what it's going to take to get mass adoption of blockchain technology, the pros and the cons. And also, we talk about the recent events in Web3, blockchain, and DeFi. Towards the end of the episode, we talk about the man himself. We talk about his background, his PhD, why he made the jump into security, and just how hard it has been to go into a space so early and to really build your own path and to get others to join on it with you. A fascinating guy. He's been on a remarkable journey over the past few years, and I hope you enjoy listening to this one. So without further ado, I'm Alex Bloisey, and this is the Building Our World podcast. Sebi, welcome to the show. Thanks so much for coming on. It's actually been so long since we first spoke, and
Indeed.
a lot has happened, especially in the DeFi space since we spoke. So we're going to go on to kind of what you do and what Chainproof do. But first, I'd love to get your thoughts on the recent sort of FTX scandals, what's going on with centralized exchanges, because that will obviously come on to a bit about what you're actually doing right now at Chainproof.
Yeah, first off, thanks a lot for having me. Yeah, it's been a long time. A lot has happened in the space. Although I do believe regarding the recent implosion of FTX and basically what has been discovered there is that it really has nothing to do with crypto itself, right? I always I was thinking like the guy could have been selling anything. He could have been selling rocks. He could have been selling uh, luxury, whatever, or I don't know, tickets or anything, and he basically stole customers' money, right? I think
Yeah.
like we had this similar thing where there was this Netflix special on this party that was supposed to be like the Fire Festival, right?
Oh,
And
yeah, I've
basically
watched that, yeah.
right? And the organizers, they basically took the money from everyone and then they spent it on advertising and stuff. And then in the end, the party was a total disaster, right? It was like total chaos. So I think this is basically a repeat of that in, a different space with a different product. And unfortunately, it's in the crypto space, which is already very polarized. So a lot of people basically just took this opportunity to just bash crypto, even though I don't think, the um, the technology itself have had anything to do with what the core problem was. I think it's as if, after the Lehman Brothers crash back in
Yeah.
2008, people would have said, well, let's not use stocks anymore. You see what happens with stocks. Stocks are bad because Lehman
Mm.
Brothers crashed and they were using stocks. It's sort of like the same narrative when you hear someone saying like crypto is bad because of FTX. I
Yeah.
think it's actually like in terms of because like you had mentioned DeFi when we started talking. I think in terms of DeFi, it's actually a solution to this problem that we're seeing with centralized exchanges and
Mm.
custodians, right? I think the big problem that we're seeing is that even though these exchanges and custodians are regulated, the regulators still depend on audits provided by third party financial auditors, right? Who might be not doing a very thorough job, right? So, as opposed to that, in DeFi, you have this sort of like proof of reserve and transparency built in, so anyone can just go to Etherscan, click on the compound contract, for instance, and check how much money or how many tokens are in each pool, right? They don't need to rely on a third party auditor to tell them like how many
Mm.
funds the smart contract has. So if this teaches us or the regulators anything, it should be that with DeFi, if FTX were really DeFi and not CeFi, this would have not this would not have happened. Like
Yeah.
for instance, take Uniswap, right? This could not happen with Uniswap. And Uniswap is a decentralized exchange, right?
Mm. Do you think centralized exchanges will still have a role in the space in years to come? How do you see their role evolving?
Well, I mean, right now their main role is to be an on-ramp, right? People who do not have crypto and have cash, they can buy it from decentralized exchanges and then participate in all of the other applications like decentralized finance. So if there is some other way in which, like people will be able to on ramp, maybe we're going to
Mm.
see less um, centralized exchanges. But at the moment, I think it's really the main on ramp. So
Mm.
I think like these centralized exchanges are not necessarily going anywhere right now, but we do recognize that there is this problem with the proof of reserves, with the liabilities. Like I think this needs to be maybe on a tighter leash or have some kind of like at least have some kind of transparency, right? It's
Mm.
interesting, because this technology should be very close to centralized exchanges, so they could themselves decide. I don't know if they, I don't, there's probably a lot of things to actually sort out, but they could decide um, to maybe put some of the funds on chain so that anyone can check them at any point, you know, and
Yeah.
then that's a sort of proof of reserve. Like I think if you keep those funds off chain and you just show a number on a web application, anyone can just like
Mm.
do bad things. But if you have some kind of really leveraging the technology, you could have a great proof of reserves.
Yeah. So almost more regulation isn't the answer. It's using the technology to regulate itself is the road you want to go down.
Uh, Not necessarily. I think like regulation could mandate that centralized exchanges keep funds on chain, right?
Yeah,
And then that's a regulation that indicates that the use of the technology is actually solving a problem.
absolutely. And I mean, me, myself, and the business as well. Obviously, we recruit into this space as well as traditional software engineering, and we've always taken the approach of, even in our like content and events and things like that, we focus on the technology. We always focus on the technology. We don't get involved in the running commentary of crypto and coins and things like that. And I think ultimately it's the technology that will win out in the end.
I certainly hope so. Yeah.
So that's quite a good segue into what you do at Chainproof. So you're the CEO there, and you're doing something that is, well, very, very new, and there's not many trying to attempt it. But it'd be better coming from you. So could you explain, what you do and what Chainproof, the problem they're trying to solve?
Yes. We are the world's first fully regulated and compliant insurance company for non-custodial smart contracts. And that basically means that we're not an insurtech. We are an insurance carrier which has been established and funded with insurance capacity. We are based in Bermuda, and the reason why we're based there is that the local government and the regulators are open to having a discussion and creating a framework around this kind of insurance. We have been basically working on this idea since 2018. And of course, like any other native Web3 company, we started building a set of smart contracts that would allow peer-to-peer insurance, right? And after a long discussion with our legal, they basically told us this might, lead to problems because it's unregulated. So we took the route of going and trying to regulate ourselves,
Mm.
and we were looking for a right jurisdiction, and we were lucky enough to find Bermuda, which helps us to move the needle in terms of I think smart contract insurance, how to do this safely, both for the customers and for the liquidity providers.
Mm. So how does it work in terms of, I mean, if we kind of break this down for myself as well, for people not as um, involved in the space and for listeners as well. So non-custodial is that, as I said, it's not a centralized exchange. So when you're insuring it, I mean, if something happens, I mean, whose fault is it? Is there, where do you point the blame, and who ultimately picks up the bill?
So it's actually surprisingly, um, I don't know what the right word would be. It's surprisingly easy for us as a security auditor to assess the risk of a smart contract. And I'm saying us as a security auditor because Chainproof is a subsidiary of Quantstamp, which is one
Mhm.
of the world leaders in smart contract security. And we have been at Quantstamp doing smart contract security audits, which are basically risk assessments of these smart contracts since 2017. So we have done up to date probably north of 600 audits. We have around 300 business to business customers, right? And we know how to accurately price the risk because of that. We have historical data on chain regarding hacks that have happened to any
Mm.
platform, not the ones that we've audited, but anything, right? But there's not sufficient data to actually build a classical insurance model. So what we've done is that together with a professor from Carnegie Mellon University who specializes in actuarial sciences, we've developed a model which is based on this limited historical data that we have on chain and our expertise as security auditors, risk assessors. When we do an audit, we don't do it black box and we just, like try to something like, if you're familiar with pen tests in the Web2 world, right, where we just try to
Mm.
attack a website, but you don't really know how it's built. Like what we do is that we get the documentation and the code from the clients. We go through the code line by line. We analyze it using state of the art program analysis techniques, static analysis, dynamic analysis. We look at the tests. We communicate with their development team, right? And we get a very deep understanding of both the quality of the product and the capabilities of their technical teams to respond to the issues that we indicate, to any possible incidents. So this allows us to accurately price the risk. And I do want to say that we've been pretty successful in the sense that we had customers come to us to ask about insuring a certain platform. We've done the audit and we said, no, this platform is too risky to insure.
Mm.
And it happened that after some time, that platform was affected by a hack, you know.
Okay.
So and the platforms that we currently offer policies for are actually like have not been affected by hacks to this point
Mm.
in time, you know. So we really strongly believe in the quality of our work and our capabilities of assessing this risk. And we've been able to convince um, some of the big traditional insurance companies in the world. One of our main investors is Sompo, which is Japan's second largest insurance company. And we have
Mm.
reinsurance backing from Munich Re, which is the world's largest reinsurance company.
Wow. So, and how many people, companies are doing this at the moment, have gone into this space? Because, I mean, obviously, I'm not one to say, but this seems sort of highly specialized. I know security, cybersecurity is a massive thing, but in this particular niche, and how many people are doing this, but also what battles have you had to fight when it comes to explaining it to the traditional insurance world?
Indeed, that was an uphill battle.
Yeah.
As you mentioned, we started talking to traditional insurance companies back in 2019 when we had our first platform built and ready because we were trying to convince them to put forward capacity and to basically allow us to use, or like for them to use their licenses to sell it in a regulated fashion. However, I think for the entirety of 2019 and a good part of 2020, we were um, fantastically unsuccessful in convincing anyone. And there were different situations. There were situations where people would just say, definitely not, because we don't have any expertise. And you're
Yeah.
basically asking us to trust a startup, which is at the time we were like 2 years old, you know? And there were situations where people were saying, well, I do believe in what you guys are doing, but I think it's too early, too early for us. And after talking to more than a dozen insurance and reinsurance companies, we finally stumbled upon these incredible partners that we have at Sampo and Munich Re, who were very open. They were at first also like relatively skeptical, but they were open to learn. So we had this relationship ongoing for more than a year before we actually, like settled and created this entity called Chainproof. And in this period, we basically went through an education period where we were basically explaining how smart contracts work, how DeFi works, step by step, like from the user going to a centralized exchange, buying some crypto, moving their funds to a chain, going into depth into protocols which at the time were only a handful, like
Mm.
Uniswap and Compound, and explaining really like how the interest rates are encoded in the smart contract and everything like that, you know. And they were really appreciative of that. They saw our capabilities. You know, we did a lot of. They don't have internal resources when it comes to smart contract development or risk assessment, but they do have like traditional cybersecurity. So, for
Mm.
instance, we went through a due diligence process with their cybersecurity teams, who basically wanted to assess whether we actually have a good practice when we do our audits. And after passing all of those tests, you know, like they basically, we basically signed a contract where we're like partnering up with them to offer this product.
Perfect. And you mentioned that people said you're too early, and that was sort of back in 2019. Um, One question I wanted to ask is, I mean, how early do you think you are now, and how early is this whole space? And I suppose in that question, it's basically asking what's the potential for what you're doing and the space that you're servicing as well.
Yes, that's a very good question. Back in 2019, when we were talking to insurance companies, I remember there was DeFi Pulse, you know, at the time showing how much total value locked is in DeFi and how many protocols there are. And I don't think there were more than 20 protocols, and the total value locked in DeFi was under a billion, you know,
Mm.
maybe like going towards a billion, you know, but still a bit shy of it. And I remember talking to uh, potential insurance partners and telling them like this has tremendous potential to grow. This will probably grow to, you know, hundreds of billions in a few years, you know, in 10 years. And amazingly, you know, it didn't take that much time for it to grow to 100 billion and even more, right?
Mm.
So I think, you know, what we've noticed is that after we established ourselves and got our license and found our partners, a lot of the people who we talked to before from other insurance companies have reached out and are now ready for more
Mm.
discussions, you know, on this topic. I think the fact that, you know, we had this whole crazy bull market starting from the summer of 2020 until earlier this year did help push insurance companies to look at this space.
Mm. Mm. But it's are these insurance companies realizing that it's a long term thing as well? Because I know, I mean, as
Yeah,
with any boom or bust in any sector, some will stand the test of time and some will filter out.
indeed. Yeah, if what you're saying is that we're still early, we are definitely
Mm.
still early. Especially now, you know, that there's a bear market and there's all of these things happening, it does create some kind of FUD, and
Mm.
people are starting to question things, you know. But
Yeah.
I think those are people who are not fully convinced or fully on board. So that's one set of people that we're seeing. But we're also seeing a set of people, like we've seen in other bear markets, who are totally unfazed and
Mm.
are building, you know, like there's these all of these developer conferences that we have in the space, where you see hundreds and hundreds of developers and hackers building stuff, you know, and not caring or like paying little attention to prices,
Yeah.
and just like uh, being super proactive in terms of what the technology can do, what the possibilities are, and
Mm.
really thinking long term. You know, I think like now is the time when the next Amazon and Google and Facebook are going to be built. You know, we're going to be looking back on 2022. I'm going to say like, yeah, that was the, you know, like the begin, like the bear market, but that's also when X, Y, and Z were founded,
Yeah.
and they're now like tremendous, you know,
Mm.
uh, companies that, or maybe decentralized, you know, like maybe it's not going to be a centralized entity like Google or Facebook or whatever. It's going
Yeah.
to be maybe a decentralized project that is going to change and affect multiple lives, to the better.
Amazing. So one thing I wanted to pick up, you said there's people that are not convinced who aren't willing to entertain the space, maybe buy cryptocurrency or whatever. And to be honest, I think that's still the vast majority of the population just don't really just know enough about it. And I think one of the criticisms I have of the space at the moment is that the barriers to entry in terms of knowledge are still very high. And I think the user experience, I think with users, they don't care whether something's Web 2 or Web 3. They care if it makes a
Yeah,
difference to
yeah,
their lives. Their back end, it's
exactly.
about just, their day to day. And maybe I think some in the space don't put a focus on that as much. But you obviously are a big believer in decentralized technology and see the potential in it. So, what would you say to these people that aren't convinced? Why do you think that this is the answer to the world's problems over the next sort of decade or two?
So you've mentioned several things which I totally agree with. There's a high barrier to entry because of the knowledge gap, right? And I think people who enter at this point, they could be of two types. There could be speculators that just buy the currency in the hope that it's going to go up and do not care about using the technology, trying DeFi out, for instance, or trying anything, building a smart contract or, anything. They just want to buy, hold, sell at some point,
Mm,
um, but those are very different types, and I do agree that for the type who wants to try things out, there is, some kind of knowledge requirements. They might not be necessarily like a degree in computer science. I think like it's a bit lower than that,
yeah,
but still there is, like I don't think like you said, the majority of the population is ready for this kind of user experience. Therefore, similar to what happened to the internet back in the 80s and 90s, before that, not many people were using the internet, right? Even though we know now it's a fantastic technology. And it was because you didn't have browsers, right? You didn't have all of these applications, which just like where people would just click and you have something amazing
mm,
like we're having a video conversation now. You didn't have that, right?
yeah,
So what you had back in the 80s was that people were just typing stuff on a terminal, and after typing a lot, they would get into a chat with someone, or they would get a piece of text about something they were interested, after searching for a long time or whatever. And that was a high barrier of entry, right? Like,
yep,
not a grandmother couldn't just go on Google and search for a recipe, right? It was like definitely a high barrier of entry. Even having a computer at that time was a high barrier of entry, right? And you needed to type all sorts of commands and try to find the information somewhere, right? So we're in a similar stage with blockchain right now where you have this high barrier of entry because we don't have the necessary tools for people to directly benefit from the technology yet.
yep,
Um, and this is still to be built. These are going to be probably the unicorns of tomorrow, the
yeah,
ones that built the equivalent of the web browser,
mm,
or something that enables the seamless use of this technology for everyone. It's
mm,
probably not going to be a browser. It's going to be
no,
something else,
yeah,
that basically allows people to enjoy this trustless world where you don't need so many intermediaries, where you have smart contracts that can enforce rules. You don't need a lawyer or someone like that, to enforce these kind of rules, right? And you can do transfers across the world in a few seconds. All of this, is basically enabling a lot of different use cases and there just needs to be someone who like figures out how I can leverage all of these use cases, maybe package
Mm.
them into one product that can then anyone can use, and that's going to enable mass adoption. Not like
Yeah.
we don't want people to need to go to on ramps and buy crypto. They should just be able to use a service like buying shoes or buying whatever they want, and behind the scenes the blockchain technology would make this faster, cheaper,
Yeah.
and so on, right?
Yeah. So I completely agree. It's the person, the entrepreneur, the companies that are going to build that bridge to the user so they can benefit from the blockchain technology. And yeah, that B2C almost space, yeah, as I said, is going to be massive. And then
Yeah.
coming back to that, so there's actually got to be benefits in the first place of using the technology. And I think that's the main sort of area of debate where people kind of center around. And as you said, the benefits the user will get from using from when that bridge is built to the user is this trustless, decentralized technology. And you think that this will make things quicker and cheaper for the end user.
I think so, because what trustless basically leads to, and why it is valuable to have something trustless, is that you eliminate some of the middlemen. Like there's not just one middleman, there could be multiple middlemen, right? Each of those middlemen is currently taking a fee, right? When you're doing an international transfer, when you're paying with your credit card somewhere abroad or something like that, there's multiple hops
Hmm.
and intermediaries that take a fee. And this is because, we need a chain of trust.
Yep.
This is basically eliminated by a technology like blockchain, right? And eliminating all of those intermediaries pretty much automatically leads to faster and cheaper services. So it's as simple as that. But there's probably like even more benefits, when it comes to transparency, right? Like there's use cases of blockchain which extend to just payments or transfers or so on. There's definitely this technology enables a lot of transparency where in some places where it's really needed, where you're handling public funds, right? Like for public procurement. I had this project back in 2019 together with the World Economic Forum and the IMF in Colombia, where we were building a platform, basically an auction platform for public procurement, you know, and this is because in some countries like Colombia, there's a lot of corruption when it comes to public procurement, and the aim of this platform was to increase transparency. But of
Hmm.
course, like blockchain, it doesn't just like magically solve transparency. You need other checks and balances in there, because if you put the wrong data on the blockchain, it's still going to be wrong. The
Yep.
blockchain basically just enables transparency and accountability, right? You see the flow of funds, right? But still, there's it's a limited technology, but it does have some benefits.
Hmm. Yeah, I'm glad we got to the nub of that because that's the big criticism of Web3. And I think, especially in the bull market, a lot of companies sprang up and they were a hammer looking for a nail. Web3 was the solution and they were looking for a problem to solve with it. And ultimately, customers don't work like that, and users don't work like that. They have their problem, and they will take whatever technology it is that will solve their problem. And if it is, blockchain technology, decentralized technology, then it will happen. If it isn't, then it won't. And I
Exactly.
think that's been especially. I mean, I follow a lot of people on Twitter. I'm trying to filter out because I still think there's a lot of crap. But there are like the people who are almost evangelical about it that don't sort of ask the tough questions and are critical enough. So I'm glad we got
Yeah.
to the number of that. because for mass adoption, that's going to have to happen.
Definitely. It's like I remember this interview that Jeff Bezos had back in the 90s with some reporter, and the reporter was really focusing on the fact of, or on the question of whether Amazon is an internet first company. I'm not sure if you know the interview, but like the
I
internet
think
was
so.
the
Yeah,
craze,
yeah,
right?
yeah.
And 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 Jeff Bezos basically told him, like, I don't care if it's an internet, if it's the internet. We have a problem, right? Our customers have a problem that we are going to solve, right? And the internet helps, but it's not the only thing that we're doing, right? Like, of course,
Mm,
Amazon has this amazing logistics, robotics, all of the stuff that they use to basically get those packages as soon as possible to the customers after they use the internet to order it online. So it would be crazy to say that Amazon is basically just using the internet and the internet is solving all of those problems, right? There's many technologies and things that come to play there, but the internet is a great enabler, for
mm.
what they're doing.
Agreed. Yeah, that interview popped up the other day, but it's interesting with Jeff because he's always, either the interviews go back to then and to now as well. It's always been about the customer and the user and what problems they have, and also what problems and what will the customer want 10 years from now. Sometimes it's not about what's going to change, it's about what's going to stay the same. 10 years from now, we're going to want convenience, we're going to want stuff quick and cheap. That's not going to
Yeah,
change, so let's
I'm
build a
not going to change.
solution around that. Yeah,
Yeah,
exactly. Yeah, and I think for many people and myself, to be honest, um, it's sometimes people will hit Web3 over the head with the hammer of people just focusing on the technology and getting carried away. But maybe I think that's getting less and less now. And people
yeah.
who sort of aren't as involved in the space maybe just see the main headlines and run with that. Um, but anyway, I also wanted to talk about yourself. Uh, Highly educated, PhD, have gone into the security world, worked at some brilliant companies, and then made the jump to QuantStamp. Why did
Yeah.
you go down this security route? I know you've done the PhD route as well. It'd be great to get a sense of why you've taken this path.
Uh, Maybe it was the movies. Back when I was a kid, I was watching some interesting movies about, like, there was, like, I remember one when I was younger. It was called Project Swordfish. I'm not sure if you saw that one. It's pretty
No.
cool one where, you had Hugh Jackman being the hacker, and he was breaking into a bunch of crypto ciphers and doing cool stuff. And it seemed like really exciting. I was already looking in the space of computer science, and what you can do with computer science, like programming, like graphics, games, and so on. And I thought, like, well, security is cool. I thought it's really cool, and you really need to prove that you're smart to be able to do it. So I took that as a challenge. And when I was like halfway through my bachelor's, I had the opportunity to work on some security projects with some professors at the university, and that was sort of the first touch point that I had with security. Going forward, once I graduated from university, I applied for a security program during the master's. And I was lucky enough to get a scholarship abroad where I learned a lot about all different aspects of security. And afterwards, I just, like, during that program, I fell in love with this whole, like, space, the security space. It's really a vast, thing, a space where you can do everything from organizational, physical security of, like, data centers,
Hmm.
locking them down and having, proper cameras, guards, whatever, to, like, maybe blockchain securities on the other, where everything is very digital and transparent and so on. So there's a lot of things that are in between, right? Like cryptography is one key aspect of maybe a lot of existing security nowadays, you know. So after I finished my master's, I said I'm gonna work in security no matter what, you know. So started at Philips, was hacking TV sets for a short while there when I realized I want to do an even like a more in-depth dive into security. So that's why I started my PhD. I did it also in the field of computer security and software protection. And the stuff that I was doing during my PhD had nothing to do with blockchain, but it helped me a lot. You know, I think there's a lot of knowledge there that transfers over to the field of Web3 because you still have programming languages, you still have programs which are smart contracts executing on a virtual machine. You all have all of that stuff in the traditional computing world as well, you know. So after a short stay at BMW, I realized like I don't like corporations, big corporations, because there's too many constraints and things are moving slowly. So I was very fortunate enough to have one of the co-founders of QuantStamp reach out to me early on. And after some discussions, you know, I was the first guy who was working fully remote for QuantStamp back in 2018. You know, like the I think the whole engineering team was like on the American continent, you know, and I was the only guy in Europe. And maybe I think later we started having people, you know, like in Asia and multiple places, and now we have a bunch of people in Europe. But you know, I was working remotely before Corona, and I loved it, you know, and basically not a lot changed for me during Corona because I was still like working from home remotely, syncing with the team over Zoom and so on, you know, like um, that's sort of the whole story, you know. But like after I joined Quantstamp, that was also something interesting because I joined as a Solidity developer, and because of this startup atmosphere, you know, you
Yeah.
have the possibility to have an initiative, you know. And one of the things that I was tasked with was like figuring out insurance for this space, you know. And I was given a free hand, you know, and I was able to navigate this space. There were definitely ups and downs, and here we are now with Chainproof, a licensed entity to offer DeFi insurance. So that's pretty exciting, and I'm really happy with this like um, path, you know, that we took.
Yeah. I mean, you kind of glossed over there, but to go from that to, I mean, what you've been doing at Chainproof, as I said, we discussed earlier, in an entirely new space and working that out, like the brain power needed and the level of thought. Um, I mean, it might not be as valuable to kind of go into the details of that in particular, but in terms of the work rate and the attitude and the mindset, maybe you've had to have in order to achieve what you've done with Chainproof. I don't know, maybe if you could shed some light on how that's been over the past 2 years or 3 years.
It has it has required some changes in at least like my mindset. For instance, before I was mainly doing engineering tasks, which were very structured, very well planned, and I basically could plan a week ahead. You know, I knew when I had time to do an audit, write some code, review some code, or something like that. Um, with this change and this shift to a new entity that needed to be created, we started having a lot of discussions with many partners that we needed to convince, you know, to come on board. We started talking to the regulators in Bermuda. We started talking to a lot of lawyers, right? Because anything that you say should be well phrased and so on, right?
Mm,
Any email that you write. So all of this required a lot of adaptation from what I was used to before to this new world, which was like it seemed very ad hoc, very spontaneous, you know, to basically go from maybe having very few meetings, maybe one stand-up meeting a day, to having basically like back-to-back meetings
Mm.
with different partners, like potential customers, regulators, lawyers, potential investors, insurance partners, and like many more. So that has been a significant change. And in each of these meetings, like you need to employ different skills. And I think the main, the main challenge was, how do we take a traditional insurance policy and make it applicable and viable for Web3, for a non-custodial. That was the key part,
Yeah.
because custodians, already have insurance. They've had insurance for some time now, but non-custodial smart contracts, that was the really the big question. And when we started working on our policies, our first policies with Munich Re, that I remember we were having like 4-hour workshops in some days, where we were like discussing all angles that could go wrong, like what could go wrong with this policy, what could go wrong with this protocol. I think that was like definitely very challenging, but in a different way. But in those
Yeah.
situations, you can still use your, like I was still be was able to use my technical skills to properly explain what a smart contract is doing and what the risks are, to someone
Mm.
who is a actuary maybe, or a lawyer, an insurance lawyer.
Mm. A 4 hour workshop to do that is enough to fry anyone's brain, I think. So, but yeah, I think you share the sentiment of a lot of people who've kind of morphed into the role you're in now. If I relate it to myself, so when I was a recruiter at the larger agency, you you almost, the analogy I always use is you have a track, and all you have to do is kind of run around it, and that's your job. You know what to do. It's hard, but you can do it. And when you kind of move into, when you're kind of running the show, you've got to make the track, and you've got to move the obstacles, and it's going from side to side and navigating and not being thrown
Yeah,
off can be hard as well.
yeah,
Even things, as you said, like back to back meetings, very hard. You have to concentrate. You have to say the right things. You have to get value from each interaction, and yeah, it's intense.
yeah, definitely. Yeah, I like your analogy with the track. Yeah, make sure that the track is still there. Make sure that you're
Yeah,
maintaining it properly and you can actually run on it.
yeah,
Yeah.
yeah. It for me, that's been the biggest sort of shifts as well. And what about in terms of the startup life? How have you found it affecting personal life? Everyone talks about work-life balance. How's that been for you over the last few years?
It's been amazing. So actually, I came in very nervous because I had also heard about, like, okay, if you're going to a startup, you're going to be working double as much as in an enterprise.
Hmm.
And I can safely say that for my work at QuantStamp, it was not the case. Moreover, I actually believe that I got way more flexibility and a few extra hours because of my remote, you know, work style. So before, when I was working at BMW, I was commuting probably like 3 hours a day back and forth, like not one way, but like the total amount. 3 hours a day. That's that's an amazing amount of time. Like I was thinking right now, we were being ripped off because we were being paid for 8 hours a day, but then we were spending probably like 11 with the
Hmm.
commute. So that's extremely unfair. And before I actually had kids only after I joined the startup. So
Okay.
I didn't experience having kids with the crazy hours and the going to the office and the commute. But now I can never imagine, like I I feel like those hours, you could spend with your family, which is like definitely very important, helping out, not just like sitting around, but like helping out, like taking the kids to the kindergarten, bringing them back, doctor's appointments, uh, like maybe cleaning around the house, doing something, like helping out, those kind of things you cannot do when you're commuting, you know,
Mm.
and for your partner, it becomes really hard to have to do everything by themselves. So the I just think that the work-life balance with this kind of like remote work has improved a lot. And then in addition to that, I do think that I was under more stress when I was at a big company, just because of the huge hierarchical pressure. There was a lot of hierarchical pressure going from top to bottom, and this is not the case in a startup. In a startup, you have a different kind of pressure, which I feel like is more like motivation,
Mm.
motivation that we make it happen. And in addition to that, you have a tremendous upside because in a startup, you generally get some equity, right? So what you're like, even if you're putting some extra hours, that you have a potential for a huge upside. As
Yeah.
opposed to in a large company, if you're putting extra hours, okay, you get those hours back sometime, but no upside.
Yeah, it's more of it's a better investment in a startup. I get you mean about the hierarchical because you have the managers above you passing on their stress and their pressures onto the people below them, and I suppose it just compounds as it comes down. No,
Yeah.
I totally get that. Um, but thank you. We'll wrap up there. I know you are very busy, but thank you so much for coming on and sharing your
Thank
thoughts
you.
around the space and also what Chainproof are doing, because it's a novel idea and it's come a long way in such a short space of time in a tough space for people to get their head round. And in terms of the future, I think it is very bright indeed.
Indeed. Thanks a lot for having me. It's been a pleasure talking to you and hope to catch up soon.
Thanks so much, Sebi.